This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 263 is brought to us by ByBit. How would you like to make a 20% return in a few minutes? Well, you can do that with ByBit right now if you're signing up for the first time through my link, which you can find down below in the show notes on my ByBit blog. Click it, scroll down to the bottom, use that link, and as soon as you sign up, you will get a 20% deposit bonus. I have updated the blog to include this link, and then from there, you're going to get the best trading experience on planet Earth. So many different, very easy, and potentially very lucrative promotions going on at ByBit all the time. Along with you, because you clicked my link and nobody else's, getting much more personalized customer service than you will anywhere else on a blockchain trading platform. Because with ByBit and with VP, membership has its rewards. It is the 10-Minute Contrarian Podcast, and I have a list of episodes I'm really looking forward to doing. They're really interesting and fun topics for me, at least, and I'm really looking forward to sharing them with you. The problem is we just keep getting smoking deals on the things we really love to invest at this time in our history. And if you've been with this podcast long enough, you know that we don't always get moments like this. They're either here and things are incredibly cheap, or they're running and doing long-term what they're supposed to be doing. And as exciting as that is over here in podcast land, in contrarian podcast land at least, it's just not quite the same, because I love pointing out opportunities. And believe it or not, there are times where the opportunities just aren't quite there. But right now they are, and I would be remiss if we didn't mention them when they occur, even if it's something we've spoken about not too long ago. I can't remember the last time we really focused in on silver, so I think we need to do that here. I really think we need to do that here because silver currently sits at $59.86. That is more than half off the highs we saw this year, and this year isn't even half over yet. Now, the question does come up sometimes. When you have a big run like that, and then a pullback of over 50%, the question arises, should silver have even been that high to begin with? And regardless of what you're talking about, it's a fair question. Like, if it's a meme coin, for example, well, probably not. But with something like silver, which like gold and Bitcoin is also money, we don't treat it quite the same we do as gold and Bitcoin here. But in some ways, it's even more attractive because it is also scarce, important, almost irreplaceable, and running out. So should silver have gotten as high as $120 per troy ounce? My response would be no. It should have been much, much higher. Actually, it should be much higher now. And I think it will certainly go much, much higher. So when you see a pullback like this, you really need to break it down and say, okay, what's going on here? Should it be going on? And if not, it's pretty obvious this is going to be a major accumulation zone when we look back at everything years from now. So one of the biggest reasons why silver has pulled back the way it has is because it's following gold. And the war in Iran has played a large part here. And with gold, I actually get it. We talked before about all these sovereign nations buying up gold. Well, one of the reasons you do that is if you really need to spend it someday. And one of the countries who bought the most of it, which is Turkey, has had to use it to pay for oil. This was very smart on Turkey's part to buy up all that gold because buying it with a perpetually crashing Turkish lira would have been very problematic. And with a lot of the Eastern Hemisphere tightening the belt a little bit in anticipation of what might be when it comes to oil they are able to obtain, not just governments, but their citizens too. Demand-wise, gold just hasn't been that high on the menu. But the real question you have to ask yourself here is, does this drop really have anything to do with silver itself? This is the number one question we ask ourselves when looking for sweet divergence. Sweet divergence is a term we have coined here on the podcast, and it means this very situation right here. When the price of something drops, often drops a lot, but the drop had nothing to do with the instrument itself, then you are getting an incredible discount on said instrument as a result, and you need to take action. And this is one of the biggest cases of sweet divergence I think I've ever seen since we've been doing this podcast. This podcast has been on for over 5 years, I think. 5 times 52, yeah, over 5 years. Now, why do I say this? Well, all right, let's just take the existing fundamentals for silver before any of this happened, and it's still going on. The overall supply, long term, is getting smaller, especially out of places like China, which for some reason the world just does not pay attention to. We had the episode last week talking about how in China, they have, they're one of the 3 large bullion banks in the world next to the COMEX and LBMA, but they have decided to do things right and to actually have the gold, which is going to make them a much more appealing option going forward, to the point where COMEX and LBMA may have to adapt or die. So if they do that, and the world can no longer play shenanigans with the silver market by shorting the crap out of the paper side of it, then I don't think I need to explain to you what that is going to do for the price of silver, because the only reason silver even goes down the way it does, and the reason why it's not probably $700 an ounce, is due to all of this paper shorting through places like COMEX and LBMA, where they are creating silver out of thin air, which you cannot do. Fiat currency, yes, because you can print more, but you can't do it with silver because you cannot print more silver. So we may be finally seeing an end to all of this nonsense, all of this illegal nonsense. But let's not forget one of the biggest reasons that silver is going to really, really be in short supply in the future, and that is all of these data centers being built. I tweeted out this week talking about how Meta is building a gigantic data center in Canada. And people are talking about how much silver and copper is needed just to build the data center itself. Well, don't forget, most of the silver and copper demand is not even going to come from the existing data center. It's going to come from the amount of power needed to fuel the data center. So take whatever numbers you're seeing from the construction of the data center itself, and you can multiply that by, I said, anywhere from 2 to 4x. And I might possibly be undershooting it. And don't forget, too, unlike copper, when you use silver to power things, it gets used up often, and you need more. Now, in some areas, it does not need to be replaced, but in some areas it does. One of those areas is in high-stress electrical infrastructure, like you're going to have here. So for existing infrastructure, we already don't have enough silver to power it. Not in a sense to where we're running out, but the supply continues to go down, down, down every single year. And now we're going to add all of these data centers and all of this new electricity needed to power not just the data centers, but everything else. Contrarians, this is a problem. And the only way they've been able to re-engineer anything to make it consume less silver is by adding more copper, which we also like to invest in a lot here. So unless cold fusion is invented at scale tomorrow, this really is a heads we win, tails we win more type scenario. And if this situation could not be exacerbated any more than it already is, we have this war in Iran, this war which is making the price of silver go down for some reason, even though, let's not forget, you have all of these munitions which require a lot of silver, being spent every single day. You have planes and drones and boats and infrastructure being taken out, and all of that silver is now gone and needs to be replaced. Outside of the war, you have all these countries who got by on not really having barely any military at all, realizing now, because globalization is over, and the United States realized what a lopsided deal we had with a lot of these countries, protecting them when they couldn't even protect themselves, much less come to our aid and help out. They have to face reality now and start building up their own militaries. And guess what that's going to take a lot of? Many things, but silver is also going to be one of those things. So you had a situation where we already don't have enough for the things we currently need. And now you're just going to tack on all of this future demand. And you're getting lower prices, much lower prices, actually, as a result. Oh, and there's one thing I forgot to mention. This is important to know, I think, as metals investors. China and the United States like to play this weird little back and forth cat and mouse sabotage game where if they see that all of a sudden a metal like copper, for example, is ending up on the United States critical minerals list, which we were very late to the party with copper. We only put it on, I think, back in November 2025. As soon as China saw this, they're like, ooh, okay, how can we make this tougher on the United States? And they thought about it and they said, well, you need sulfur to process copper. Let's put a huge tariff on sulfur and make this process a lot more expensive and a lot more difficult. And then the only reason they've done that is because the United States has done that to them in the past. So you're going to see this little back and forth going on as well that is only going to make the whole process of getting some of these metals out of the ground and turning the ore into actual metal. Back in the globalization days was actually pretty seamless, but won't be anymore now that it's every man for themselves. Say what you want about globalization versus where we are heading, but this shift is nothing but bullish for silver, in my opinion. I mean, how can it not be? I would welcome anybody's opposing viewpoint here. I just don't think there is one. And you're going to give me a 50% discount off the highs? Like what? Contrarians, you need to be taking advantage of this. Now, let's talk about that. We need to mention the technicals here for just a moment. Normally, I wouldn't even bring the technicals up, but if you want to look on your monthly spot silver charts right now, it's not pretty in a sense too. I'm not one of those people who likes to sit there and say, oh, this chart looks good, this chart looks bad. When people say that, I find that to be very strange most of the time. But you may see that if you want to plug your system onto your chart and then look at spot silver on the monthly, you might be close to or already getting a bearish signal. Maybe you're not. But my charts are telling a different story. So there's a bit of a dilemma here in terms of when to buy. Now, I will say it again. I do think silver is simply better money. It doesn't really matter when you buy. And you're also going to run into a psychological trap here if you don't take action fairly soon, in my opinion. Remember, none of this is financial advice. I'm not licensed to give it. Don't do anything I say. But if you just heard what I've been talking about for the first 12 minutes of this episode, and then you look at the charts and say, well, we might have a bearish signal coming up. Maybe I shouldn't buy now. Well, okay, if let's just say price does drop even further, when are you going to buy exactly? Now, you can sit there and wait for a bullish signal, but what price might that be? Like we've seen silver move violently to the downside and the upside. If you're one of those people, and I hope you're not one of these people, I tweeted about this too, who say, well, okay, I'll buy silver if it comes back down to 50 or 45. Because I am a price action chartist, and my charts say that that's where price should end up. And look, I get the logic behind, okay, price is going to break this support line, and it will probably go to this support line. I know what you're saying. I'm just telling you that doing things that way is highly, highly inaccurate. It looks cool. It makes somebody sound smart. But if you were to actually track how often these price forecasts actually come true, you would laugh at just how low these probabilities actually are. It is the one aspect of technical analysis I shake my head at more than anything. Technical analysis to me is a terrible predictor of how far price is going to go to the upside or the downside. You have all these people saying, I'll buy Bitcoin at 50K. And this is exactly what I did, not because of technical analysis, because I set a number back when Bitcoin was at 16,000. I said, okay, I'm going to load up at 10. And if you guys remember what price did back then, it never came close to hitting 10. And I missed out on some very cheap Bitcoin. Now, this was about 5 years ago, and I have since very much learned from my mistakes. But to do it based on your charts, I think is just so silly and so low probability. And then psychologically, the trap that happens is if price does get to those lower levels, sentiment is typically going to be even worse than it is right now. And that's going to be a lot of added pressure on you, because this is the reason why people don't buy at bottoms, because you have every idiot on social media and mainstream media saying that the thing's just going to go to zero or it's going to go to an even lower level. And then your cheap ass sits there and says, well, I shouldn't buy it here because I can get it even cheaper. And then you just keep telling yourself this and telling yourself this and telling yourself this until price does finally reverse and goes up, and you have officially missed out on everything. So even though the charts might be saying one thing, the fundamentals are screaming bullish. And I want everybody to remember, this is the inverse of what we do with trading. Trading, we don't care about fundamentals so much. But investing, we do. That's really the cornerstone of what this podcast is all about. When it comes to charts, we mainly use them for buying opportunities and then sometimes for taking some profit off the table. But in this case, you have a classic battle between fundamentals and technicals. But I think the fundamental case is just way, way too strong here to the upside. So if you were looking to start a position or add on to previous silver positions, remember, short to midterm timing is not my forte. It is not your forte. It is not anybody's forte. But to get silver at half off the highs, with all that's going on and all that's coming up, I would strongly consider it if I were you. Now, as far as I go, this is going to seem, again, we're really testing both sides of the argument here. I have mentioned this before. I am currently very overweight silver because I have physical silver. I have silver miners. But you have to remember this too. I also have gold miners, and I have things like the GDX, and there's a lot of silver in there. Gold miners and copper miners, which I also have, is where the majority of your silver comes from. Don't forget that. So I'm pretty happy with my gold miner, silver miner, and copper miner allocation as of right now. I've told you guys I'm really building my position on some crypto assets, crypto stocks mainly, and that's what I'm focusing on now. And until I get that fulfilled the way I want, that's where my focus is going to be. But the main reason this is the case is because, like I just said, I'm already pretty happy with my investments on the silver side. So much to the point to where I'm overweight. But if you are not, or you just simply want more of it, I do feel like now's a good time. Now, what my detractors like to do is find something I said 5 or 6 months ago, and if I'm bullish on it and price is lower, they like to point to that. I'm okay with this because those people are not our people. That is very mushy middle thinking. That is not long-term thinking. We almost never buy at bottoms because nobody ever buys at bottoms, so shooting for bottoms is a fool's errand. We simply want to buy when things are cheap or discounted or both. And I think we have the both situation right now in silver. Even though on paper it really does not look like a buy, you have an asset that is essentially crashing, lost half of its value in under 6 months, is about to show a bearish signal on the monthly chart, and we just don't know how long the catalyst for much of this drop, the war, is going to continue. So if you don't understand what we understand, this whole idea of buying silver now is going to be absolutely crazy. But when you do know what we do, and you have a long-term focus, which most people in the investing world don't for some reason, then buying silver right now makes you anything but crazy. It just means you still get to be early.